2 p.m. Central African Time, a very good afternoon to you and welcome to the very first episode of Market View for the year 2025. It's a brand new year and we are very thrilled to kick things off with the stories, the insights, as well as the numbers shaping the economic landscape here at home as well as across the globe. As we step into the year 2025, the roads that we travel, now both literal and economic, are in focus. With businesses still reeling from damage caused by the recent rains, we ask the Ministry of Finance if this year's budget will finally deliver the infrastructure relief so many are counting on. Small and medium enterprises, the beating heart of Eswatini's economy, they are urged to seize new opportunities. Now, millions in funding have already been disbursed. We all know that, but the question then becomes, will this year's initiatives unlock their full potential? Later, our Enterprise Watch, Honorable Neil Reichenberg, breaks down the priorities for the next fiscal year, from managing public debt to paying suppliers faster, as well as avoiding major tax hikes. Could this be the reset the economy needs? It's a big question. And of course, global markets are kicking off the year with dramatic swings. U.S. indices stumble, Asian markets see sharp declines, while Eswatini holds steady with modest gains. Meanwhile, Brent crude surges. What does this mean for commodity traders? Sanila Sibia is going to break it all down for us on our market analysis. It's all coming up right here on Market View for the very first time this year, 2025. We're really thrilled and excited to have you join us once again for an important ride of what is going to be a strong start to the year. And hopefully we can sustain that as we develop the kingdom of Eswatini. Let's kick things off by looking at our business news. On our first story, the recent rains have left many roads around the country badly damaged, cutting businesses, of course, especially small and medium enterprises from markets. Now, with the Ministry of Finance preparing the budget these days, we asked the Minister for Finance if we can expect to see an increase in the budget for roads this year.
Road infrastructure is crucial for businesses as it facilitates the movement of goods and services, reducing transportation costs and improving efficiency. With Eswatini experiencing rains, roads have been badly damaged, and small and medium enterprises business federations say their members have been severely affected.
The only disturbing issue would be the destruction of their infrastructure. As we are aware that small businesses, they use infrastructure that is not very strong due to lack of financial muscle. And the heavy rains experienced make it very cumbersome to adequately stock, as some of the stock may be damaged in due course. There is also the issue of road failures, which also makes it difficult to move from one point to another. You would remember that most MSMEs use public transport in doing business, and transport is not easily accessible, especially in weather conditions like these where roads are not good at all.
We had received some major disturbances, especially on retailers, agro-businesses, as well as suppliers. With regards to retailers, they are unable to do their stocking, and also their customers, they are not getting enough customers because of the restricted movements. With regards to the farmers, you find that the fields are wet and the crops are easily destroyed, especially the ones that are sensitive to lots of water.
The Minister for Finance, Honorable Neil Reichenberg, says the budget for roads will be improved.
There's been some very heavy damage to roads in Eswatini, which is again a friction on our maintenance. We do need to try and understand that whatever we build, need to build it stronger. When people put on roofs, put on 0.5 millimeter galvanized, not 0.3 millimeter galvanized roofs, glass windows, don't put the small one, put the thicker one. We need to start learning to be tougher, as well as government. We need to build our infrastructure stronger to handle this new climate change elements that we have as a country. But the floods will have made some serious damage. We definitely will do what we can to push more funding towards this. At the same time, we do have pockets of emergency funding, and where the emergency is, the funding needs to flow towards. And so even in last week's cabinet meeting, we were having discussions on how much of NDMA funding could we move towards roads, and there's a lot of activity taking place in that space. At the moment, there will be funding in the Ministry of Works budget for roads, and so you find that whatever's left in the budget, they'll have to now reallocate to quickly fix these roads where we are in trouble. Made more budgets available for fuel, because some of the government equipment was apparently not having fuel, so a supplementary budget had fuel for that specifically. It was catered for, and I believe that it'll really have a lot of relief on the roads pressure.
In the year 2024-2025, the Ministry of Finance announced a provision of 390 million emalangeni for road maintenance and major rehabilitation in the budget. According to the Disaster Management Agency, by the 9th, over 300 people had been affected by the rains and floods. For Market View, Nelson Dlangamandla, Vuminkosi Nzinisa, Mbabane.
Small and medium enterprise holders have been urged to position themselves to fully benefit from the different funds and initiatives by the Ministry of Commerce, Industry and Trade this year. The director of the Small and Medium Enterprise Unit, Mluleki Dlamini, has highlighted some of the initiatives they will engage in to vigorously grow this sector.
This year, our focus will be mainly on leather development, as we have started the leather skin and hides pilot project with the Eswatini meat industries. Currently, the skins that are produced in the country were not stamped to be traceable, that they originate in the country. So it is one project that we have started off this year, and we're hoping that all these hides and skins that will be traded globally will be in a position to have that mark that they originate from Eswatini, so that we know in terms of their quality and the standard. So we basically piloting that project, and we'll be rolling it out throughout the country as we continue in the year. And also another one is the Ingelo certification mark that we launched last year, which basically speaks to certification of locally produced products with the mark that will be coming from SWASA, and all of those products in the shelves will have that mark. So we'll be starting off with about 20 entrepreneurs that will go through that process. It is a long process that will be occurring. We are hoping that in the first 6 months in the year, we will see some of those entrepreneurs with that market, their products in the market. And we also appeal to customers to buy those products to support our local entrepreneurs. In terms of access to finance, we will be continuing as we have a new product in the market. It's a microfinance fund that is basically funded by the Taiwan embassy in the country at the tune of 18 million. And currently we've disbursed about 8.4 million, which we have reached 441 entrepreneurs. And we'll also continue with our informal traders revolving fund with the FinCorp. We're looking at rolling it countrywide this year because currently we've got about 65 businesses that have benefited to the tune of about 300,000. All of those are initiatives that we'll be pursuing this year, and we will continue to market and also encourage businesses to use our small-scale enterprise loan guarantee scheme, which at the moment we've already guaranteed up to 240 million loans, which basically benefited about 1,700 businesses since inception. And we are encouraging others to continue to use this facility and also look at exports as well, because we've got an export credit guarantee scheme as well that can be used when a business is now in the export sector. So all of this initiative will continue to vigorously pursue also in this year.
All right, and that is how we cap off our business news. We go for a net break. We return with our Enterprise Watch segment. We want to listen to the Minister for Finance, Honorable Neil Reichenbach, outlining several economic priorities that are aimed at improving the economic landscape of Eswatini after the break.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Welcome back. We get into our Enterprise Watch segment now and we listen to the Minister for Finance, Honorable Neil Reichenberg, who outlines several economic priorities aimed at revitalizing the economy next government financial year 2025-2026, a year that is going to start in April. This was outlined during an interview with our capable business journalist, Nelson Ndangamandla, where the minister talked about the need to manage public debt, payment of suppliers, as well as sharing whether there will be changes in taxes, further giving a highlight of the budget, which is expected next month.
Honorable Minister, welcome to the show. This is the first show for the year and Happy New Year. We thought we should come to you, Honorable Minister, because we want you to give us the key economic priority areas for this year and maybe touch on the highlights of this year's budget.
Thank you very much, Nelly, and Happy New Year to you too. Thank you. So obviously we are still finalizing the budget for the following year. It is still in preparation stage, even though it's getting close now. The timelines are short, but we are trying to make sure that the budget does encompass all the critical needs. So obviously I'll announce in the budget exactly all the items that are there, but I think what is clear for everyone to see is we'll really try and make sure that we close out some of the projects that we've been working on, like the ICC was more or less closed out this year. It might just need the final touch-ups. The hotel, we're going to try and make sure we can try and get that hotel at least close to getting done with, closing out Lucid Phase 2, really making sure Mkono Gwavuma continues going as well as what it is, coming with new roads projects. Roads is really a priority. So if you talk of 12th Parliament, there's a lot of pressure for roads. And so you'll probably find quite a lot of focus on roads during the budget. But again, it is growth that we are aiming at. So we're going to see what we can do to try and push the budget towards trying to make sure the economy grows. As you know, our economy in Eswatini, we've got a big problem with unemployment and we've got a big problem with poverty. And so the main goal is to say, let us try and push growth, because if we get growth, people get employed and people get better jobs. And people get better jobs and get employed, we come out of poverty. So it solves all these matters. So there's a strong drive on growth, and I'm sure that'll be reflected in the budget.
When we speak on the budget, Honorable Minister, I'm sure business people always look for any new tax reforms. Will there be any changes to the tax this year?
So sin tax is something that we normally do look at, even though we don't try and overload it or try and get too. Normally just adding something small to sin tax might be considered. And again, I'll announce it in the budget speech. But we are trying not to come with any major tax increases. That's definitely what we're trying to do in this term. At the moment, businesses and at household levels are still under pressure, still from the COVID era and obviously all the different unrests in the world. So for that reason, we are saying let us try not do that, but we are still trying to broaden the tax base. So you might find if there are tax changes, it is trying to close the tax net kind of tax changes, not increase taxes kind of tax changes.
Understood, Honorable Minister. I want us to speak about public debt. What are you doing as a ministry to manage public debt? We have seen suppliers complaining that government is always delaying when it's time to pay them their finances. What is it that you are doing to help these suppliers to ensure that they are put at ease and are able to run their businesses? And is there anything that the ministry is doing to seek more funding?
Okay, so let me start with suppliers. So what we have come from an era of having a stock of arrears in Eswatini, which is a very unhealthy thing to have, is arrears. All you're doing is instead of having a loan, you're having a loan with your suppliers. And it's just very unhealthy because end of the day, suppliers charge more, you put your businesses under strain. It's very not right thing to do that. So we are coming with 2 loans to try and take care of arrears once and for all. 50 million US dollar loans, one from World Bank and one from African Development Bank. They are in quite final stages of being prepared. Hopefully I'll have it in Parliament within the next month or two. And we are planning that these loans actually do deal with arrears once and for all, is our goal. You can imagine the Ministry of Finance, it is just very unhealthy and very uncomfortable for us too, being in an arrears situation. So that is going to be a strong drive the next year. One of the real big things we want to do in 2025 is to put arrears behind us once and for all. The fact that in December we managed to pay all the suppliers is really just the SACU cycle. So unfortunately we're in a cycle now where when SACU comes in, we try every time to settle all the suppliers. Now it doesn't mean everything at Treasury is paid. There might be projects that government is still planning to implement that isn't paid yet. Those might not be paid yet, and those will be paid as we get money. But we managed to pay all the suppliers that were at Treasury. And hence we made an announcement just so people understand that if you are owed money by government, it might be stuck in a ministry or it might be in the pipeline. But whatever was at Treasury, we managed to settle, which was lovely for us to do. But unfortunately, you'll find before the next cycle comes in, there'll be a buildup of suppliers, not, timing getting delayed before then. And that's very unhealthy, and we need to sort that out with these two loans. Your next question was on debt. So again, debt is not a major problem in general, but we need to watch our debt to GDP ratio. Yeah. And so at the moment, what we have managed to do, we did grow into more or less the 40% debt to GDP ratio space, which is still a healthy area. If you look at most countries, they're way, way beyond the 40%. We are still very in healthy territory as Eswatini. But we've managed to get the fiscal deficit down, which is causing us to grow our debt to GDP. So our fiscal deficit now, this financial year being just less than 2%. Next year, we're going to keep it low again and keep the deficit low to make sure we don't grow. Our stock of debt might grow, but our debt to GDP mustn't grow. And so that's what we've got to watch. And in time, in fact, even reduce that slowly, the debt to GDP ratio. And so once again, the budget speech will be quite clear on where we stand and where we're going to in the coming year. But we are keeping an eye on that. We're really making sure we don't. So we will continue to take on debt. There'll constantly be loans that we'll be asking for, but understand as we're taking on new loans, we also are repaying a whole lot of other loans in the meantime. And so it's a matter of a rolling stock of debt and possibly even increasing slightly as our GDP grows, but keep it in that healthy 40% debt to GDP ratio.
With the different financial reforms that the ministry has engaged in and money coming in from SACU, I think the minister is known to say at some point Eswatini will start feeling the changes. But there has been a complaint, Minister, that Eswatini are not seeing any changes. Can we expect anything different this coming year?
So look, coming out of COVID, there was definitely a lot of pressure on household expenditure. You find that during the COVID era, inflation grew and household income did not grow, just meaning that if someone, I'll use a silly example, if someone can go to KFC 5 times a month, they could now no longer go to KFC, or whatever the deal was, but you had to reduce expenditure in households to survive. Now, since 2023, we've really been trying to reverse that. So 2023, we had a double-digit growth in our percentage of expenditure, which is very high. Most countries really can't get to that kind of levels. 2024, double-digit growth in expenditure. 2025, we are hoping to announce a double-digit growth in our expenditure once again. 2023 is reflected in growth. So our growth, 5%. 2024, we're talking of our numbers are showing 3.5, but because of rebasing, it has brought it down to 3.5. If it wasn't for the rebasing, it'll be far over 5%. 2024. 2025 now, we're talking of 8.3% projection on growth. And these are statistics that are coming with these numbers. And normally we are conservative when we are projecting our growth numbers. And so it's just showing that we are getting the increase in expenditure, which drives household money. The money goes down all the way through somehow to household level. Our growth is showing that it is working, that it is actually giving us the growth that we want, and inflation has been coming down. So even though we managed inflation very well as a country, most countries did a lot worse than Eswatini on inflation, but it has now come down from between the 5 and 6% to around the 4, even below the 4%. So meaning that at the same time, we have also been trying to push the minimum wage. You'll notice the minimum wage in the country are continually increasing a lot more than inflation, because those really are, in December, for instance, we were having problems in the textile industry because for the first time ever in this country, textile workers were starting to pay tax, meaning that they were going beyond the 3,500 emalangeni threshold. I I think some of them had worked overtime, and all of a sudden they were paying PAYE, and they'd never seen something like PAYE before. And there were even some sit-down strikes happening in Matsapa. And ERS had to go there, explain what it's about, and I think everyone understands, and everyone started working again. But it was tough for them to start paying tax. I know it might not be nice, but the fact that they're entering a 3,500 threshold on tax and income is should start giving a lot of relief at the bottom end. Most sectors, most of the big sectors in the country, wages have been increasing well for the bottom end of the industry and for the general workers. And that'll definitely start taking relief off household expenditure. So even people always complain. You'll hear every day people say, "Oh, Gubinje," but really on the ground, according to the numbers and according to what we are seeing, there should start being a lot more relief for household expenditure.
Thank you so much, Honorable Minister, for sharing with us the key economic priorities for this year. We are eagerly waiting for the budget just to see how the country will grow this year.
All right, that was our business journalist Nelsuwe Ndangamandla in conversation with Honorable Neil Reichenbach, the Minister for Finance, looking at the economic landscape of Eswatini and how the ministry plans to revitalize it in the next financial year. And speaking of finances, let's take a deep look into the indices that define the day with economist Sanele Sibiya after the break. Don't go anywhere.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
This is our market analysis, and thank you for staying with us as we let you understand some of the global markets that are sending mixed signals as we step into the year 2025. We're seeing major indices in the United States and Asia are sliding, as well as Europe that isn't faring much better. But Eswatini is holding steady, which is quite interesting. What do these movements tell us about the year ahead? To help us unpack these numbers and what they mean for our local economy, Sanele Sibiya joins us now virtually via Zoom. A very good afternoon to you, Sanele Sibiya. I do want to say compliments of the new year. I don't know if we are still allowed to say that 13 days into the new year, but as we start, can we look at the global context? We are seeing sharp declines in the United States and Asian indices, with the Dow down by 1.63% and Nikkei slipping over by 2.6%. What do these figures tell us about the global economic outlook as we begin the year?
Thank you, Mr. Ngumalo, and good afternoon. So what we're looking into in terms of what the year is telling us is markets are taking just a step back to see and try to map out a trajectory of interest rates as the year goes by. So what the numbers are saying, if you look at the jobs data that came in, the non-farm payroll data that came in last week, signaling a relatively strong U.S. economy. And also, if you look at the growth numbers, again, they are signaling a relatively strong U.S. economy. Yet inflation, on the other hand, has been showing signs of a bit stubbornness. So that's what the markets are now trying to price in, what is actually going to happen in terms of the interest rates in the U.S. Are we going to see a bit of a longer pause, or we are going to see yet another cut within the year? So that's what the markets are trying to factor in, and that's just basically ripples across the globe. I mean, if you remember back in May, June, when we started seeing the interest rate cuts come through across the globe, what happened was many central banks started following suit after the Federal Reserve Bank in the US did the same. We saw the Europeans going at it first, but everyone else just kept steady until we got that cue from the Federal Reserve Bank. So that's what we are seeing in the US. The numbers just basically losing from those all-time highs that we're seeing just the previous days, just coming back to relatively the normal numbers as markets just try to mull that in. And as you know, that this
weekend we are going to see the swearing in of President Trump, and that again is going to have an impact on the inflation outlook. Again, in Europe, we're seeing the same story. It's all about that interest rate trajectory. Where are we going to see interest rates go in the next year with inflation overheating in the world's largest economy? So that's what we're seeing coming through in those European markets. Also, just taking a step back, waiting to see what the Federal Reserve Bank data is going to be. If you move into Asia again, you see it's a relatively the same story. Markets are waiting, to get the inflation data that's coming out this week. But if the jobs data that we saw last week is anything to go by, it does signal that we should see such quite a longer pause in terms of the interest rates and its movement. So we are waiting to see that. But interesting within Asia, we've seen the exports reports that have been coming out of the mainland China, just showing that, exports are really on a surge within China. So we don't know whether this is the calm before the Trump storm or whether the Chinese have found a way to actually diversify their export portfolio in terms of the export destinations, and that in itself would go around to lessening the likelihood of a very rebellious trade war. Again, when it comes into South Africa, figures are showing relative losses of around 1.56%. Again, that's purely because we're waiting to see what the US is going to do. And then in the local markets, we're seeing that there hasn't been any movements for the past 3 months or so. So what that means is we do need to find ways to make our stock market vibrant, and we need to find ways to make it one of the major capital acquisition destinations across the globe. And then when you go into our commodities, gold is still holding steady at around that 2,700 mark. That's purely because of this policy uncertainty in terms of what we are going to see with the Trump presidency, in terms of what we are going to see with the interest rates across the globe. So what we're seeing is markets just trying to use gold for hedging purposes and ensuring that you don't lose much. And then we're seeing the winter effects coming through the oil markets with the US and Europe also in winter. That has actually pushed up the price of Brent crude to that 81 mark from that 77 type of equilibrium that we've been seeing in the past months. And then also we've seen some de-escalations within Syria, and hopefully the Israel story is going to be sorted out also. And then when it comes into the currencies, we're seeing some weaknesses against the dollar and the Japanese yen, yet we're seeing a bit of strengthening across the euro. So you know that in Europe there is that friction within France in terms of the geopolitics there, in terms of the allegiances. And we've also seen that strike coming through from the Eurozone market. So that's why from the French markets, just basically affecting currencies negatively. And hence we've been gaining a bit on that. And then in terms of the rate of the dollar, Lilangeni exchange rate, the impacts there, with Trump coming in, and what we've been seeing is bond yields have been on an upset or been on a surge, signaling that, markets are not expecting that interest rate, and that has actually pushed the dollar upwards a bit. I thank you, Mr. Nxumalo.
Sanelesbia, thank you so much for your time. We are seeing that, the insights may change, but they will always stay ready as we continue to give our viewers what they need to know regarding these indices. Thank you so much for your time, Sanele. We want to also thank our viewers for tuning in to the very first episode of the year. Do stay with us and Eswatini TV as we continue to give you more programs. But most importantly, do join us again tomorrow at 2 p.m. for another episode of Market View. Bye-bye.